You know, when you first look at the market, it just feels like pure chaos, right? It's this overwhelming storm of noise and numbers and emotions. But what if I told you there's a map, a system that lets you navigate all of that, based not on what you feel, but on what you can actually see on the chart? Well, that's exactly what we're going to break down. But first, let's just get this out of the way. The big question every single trader has asked themselves, probably after a really bad day. Is my brain even built for this? I mean, are our natural human instincts helping us, or are they our absolute biggest enemy in the markets? And this quote from the legendary trader Oliver Velez, wow, it just nails the problem perfectly. We think we're trading the market, but we're not. Most of the time, we're just trading the stories we're telling ourselves about the market. Our hopes, our fears, what we believe should happen. And here's the thing, none of that is real. They are not actual tradable events. And that right there, that sets up this central conflict for pretty much every trader on the planet. This internal battle between our own mind and the cold, hard reality of the market. Let's dig into what that really looks like. This slide just lays it out so clearly. You've got two paths. Over here on the left, that's the default human way. We trade based on a gut feeling, we're always chasing that one huge, life-changing win, and we clutter up our charts with a million indicators hoping to find some kind of magic formula. But then there's the other path, on the right. This is the goal, trading to find repeatable events. Aiming for steady consistency, not some lucky jackpot. Following rules instead of emotions, and focusing on what the price is actually doing. So the big question is, how do you make that jump? How do you get from the emotional side to the systematic side? Well, you start by understanding a fundamental truth. The market is nowhere near as random as it looks. There is a map. There's a single, universal pattern that it repeats over and over and over again. And this is the bedrock of the whole system. You see, this is the secret, right here. We get so caught up thinking we need these incredibly complex strategies because the market is so complex. But it's not. The market structure is surprisingly simple. It really only does one thing. It just does it on different time frames and at different speeds. And this is that one thing, the universal cycle. It always has these four parts. First, you've got the base. This is the quiet before the storm, where everything gets tight and flat. Then, bam, the rise, the explosive move out of that base. That leads to the top, where things get wide and spread out and the energy starts to fade. And finally, the fall, the move back down, ready to start the whole cycle all over again. Your entire job really is to look at a chart and answer one question: where are we in this cycle right now? So, how do we figure that out? How do we know where we are in that cycle? You don't need a crystal ball, I promise. You just need a compass. And for this system, our compass is built from just a few really simple but powerful moving averages. And these are the only tools you need. The 200 simple moving average. Think of it as the anchor of the chart, the granddaddy of them all. It's an absolute beast when it's flat, acting like a concrete floor or ceiling. Then you've got the 20 SMA. That's your trend guide. When it's angled up or down, it's like a moving support rail. And the 8 and 13? Those are your power tools, the specialists you bring out when a trend goes parabolic and gets really fast and steep. Now, using these simple tools, we can spot two of the most important states the market can be in. On the left, you've got the narrow state. This is when the price and the key moving averages get squeezed together super tight. It's like a coiled spring just building up energy for a massive explosion. On the right, you have the exact opposite. We call it the three-finger spread. Everything's wide apart. The energy is spent. It's like a rubber band that's been stretched to its limit and is about to snap back. Okay, so we've got the map, we've got the compass. Now for the fun part. How do we know when to pull the trigger? Well, we do that by waiting for very specific, very obvious events to happen. These are the signals that the big institutional money, the elephants, are making their move. And they can't hide their footprints. And that brings us to the first and most important event, the elephant bar. This is not just any old price bar. This is a huge, powerful bar that just dwarfs all the little bars to its left. Look, you and I can't create this. This takes billions of dollars. This is a massive institution making a statement, and they're leaving a giant footprint for us to see. Next up is the tail bar. I love this one because it's so visual. That long tail tells a story. It's the story of a battle where one side tried to push prices way up or way down, and the other side just slammed them back with incredible force. It's a powerful signal of rejection. And then there's the 180. Honestly, this might be the most violent, most powerful reversal signal you'll ever see. You get a huge, strong bar in one direction, and then immediately the very next bar is an even stronger bar in the complete opposite direction, totally wiping out the first one. It's a flat-out 180-degree turn in market sentiment. And finally, we have the simplest event of them all, the good old color change. It's literally just a flip from a red bar to a green one, or from green to red. Now, on its own, it's not much, but its real power comes from its context, especially when you see it happen right off a trending moving average, like that 20 SMA we talked about. But here's the best part. You don't need to be an expert in all four of these. In fact, look at this. Elephant bars, they account for 65% of all the high probability opportunities. You could literally ignore everything else, become a world-class expert at just spotting elephant bars, and build an entire career on that one single event. It's about focus, not complexity. Okay, so we have the market cycle. We have our moving average compass. We have the key events, the elephant footprints. But there is one final, absolutely crucial piece that ties this all together. And it's the same rule that governs real estate. It's all about location, location, location. So think about it like this. Seeing one of those four events, that's an opportunity. It's a knock on the door. It should get your attention and make you sit up and pay attention. But by itself, it is not a trade. Not yet. Because an event happening in the right location, now that is the whole game. That's the secret sauce. That's the high probability trade we're all hunting for. It's not just what happens, it's where it happens in the grand cycle of the market. And there are really only 3 prime locations you need to care about. Position 1 is the launch pad, that tight, narrow base where all the rocket fuel is stored. Position 2 is the runway. This is the main trend where you're just cruising at altitude. And position 3 is the peak, that wide, stretched out area where the engines start to sputter and a reversal is just around the corner. And here is the magic when you put it all together. You take the absolute best location, that's position 1, the narrow launch pad, and you combine it with the most common, most powerful event, the elephant bar. What do you get? You get a play that has a staggering 92% follow-through rate. Let that sink in for a second. This isn't about hope or luck. This is about waiting patiently for a setup that gives you a massive statistical edge. Which brings us right back to that critical mindset shift. Our job as traders isn't to be frantically hunting for action all day long. Our job is to wait, to sit on our hands with the patience of a sniper, waiting for one of these A-plus setups to appear. Just like it says here, the professional waits for what they know works. The novice is endlessly searching for something new. So I'll just leave you with that one question to think about. When you look at your charts tomorrow, are you going to be searching, reacting to every little flicker on the screen, or are you going to be waiting patiently for your setup, the one you know gives you a real edge? The answer to that question could change everything for you.